Hello, trading is closed on November 7th, 2019. Let's go over our calls. Looked for a pattern with the early low, late high. Said usually this high is over this low, but it didn't have to be. Looked for higher prices. Here it is in black and white, I guess. Looked for higher prices, early low, high in the final hour. There's no requirement the late high exceed the early low, though it does so most of the time. And it doesn't, it's negative. Should see lower prices tomorrow unless today's high is taken out early. Futures are up, so I guess anything's possible. During the day, MEJT gave a sell signal. We got it. Said this rally wouldn't stick, and we got the drop. Nothing for tomorrow. We gapped up, hit a new high, couldn't hold on to any of the highs, couldn't even hold on to the low, and tellingly, we couldn't close over the prior high. It's a rejection of the advance. It's once again evidence we're not in an impulsive move, that we're in a corrective phase and we have to see a C wave down at some point. Well, here's the count we've been using. It's not the only count, but you're not going to see Fibonacci grids as ideal as this very often. This is your 61.8, your 50, your 78.6, and your 100 right at today's high. You've got great Fibonacci balance right at this high. Now, if this is the right count, I can't make everything work. You'd like magenta C and magenta A to have a relationship. But it's not the only count, and it sure would be nice if there's a different count where all the fibs work. And, spoiler alert, there is. You're not going to get as many fib relationships as perfect as this very often. Everything works. They're pretty much right on the nose, and there's intense Fibonacci resistance at today's high. It's not a guarantee that's the end of the leg, but you don't see as many fib targets from patterns of different degrees all print right at the same price all that often. And when it happens, I think it pays to pay attention. I was never a big fan of candlesticks. They don't work often enough for me. But when they involve the upper Bollinger Band, as they do on the transports, and they give a negative signal like this, if we get confirmation tomorrow by dropping, we have a target of the lower Bollinger Band. Hasn't happened yet. Let's go over tomorrow's plan. I'm not a fan of candlesticks, as I said, but they involve the band. Have a shooting star pattern if we gap down tomorrow, which hasn't happened. But if we do, we have an abandoned baby as well. Leads to a challenge of the band. So we have to look to see if we get a gap down or at least a drop, which confirms a negative pattern. Tomorrow's pattern has the early low. Doesn't mean you couldn't gap up. We gapped up to a new high, hit a higher high, couldn't hold it. Worse, we undercut the intervening low, the last prior high. It's a rejection of the new high. We either take this high out from today early or lower prices print. We didn't close near the high of the day. We take this high out early or lower prices print. So usually a good wave balance at today's high is a good candidate for the end of this leg. All we need now is to undercut some prior lows. And if that happens, it could be the start of wave blue C down. So we'll have to see if this holds or fails tomorrow. We have to pay particular attention if we gap down. which would have very negative implications. Tomorrow's pattern has the early low. If we start dropping, there's a good chance that high was it for this leg. And that's today's call.